back to MyStockScanner Live. It's Tuesday, and after a bank holiday in the UK, well, the markets were open in the US, but now we're up and running again here in Scandinavia and Denmark as well. So we're ready to navigate the early week patterns with one simple playbook, the 3-point playbook. That's where we look with quality, upside, and timing as our guidelines. Hans-Henrik, 3-point playbook portfolio minus 1.5. I know that you're sitting on your hands right now, which is a bit of surprise, because I'm not saying that you are trigger happy, but you like to find good stocks, but you're just not buying at the moment.
Now, I have a real problem because I would like to sit on my hands, but also bite my nails at the same time, which is kind of hard. Yes, we are satisfied with the current portfolio. We are 38% invested. And in the current situation where we think the night's events here with TACO and deadlines and stuff could go a bit in the wrong way, we are quite happy of where we are.
But Liam, isn't it tempting when you see Samsung come out with numbers that's 8 times bigger on profits for Q1 and then go, oh, we need to buy?
Absolutely. I think what it shows is what we've been saying for quite a while now. There's a lot of demand out there for CPUs and GPUs going forward. We've always said where this breaks is not going to be demand for the actual technology itself. It's probably going to be in the credit area.
And the credit area could be something that we get to talk about today, because Anthropic has made a move with Broadcom and Google. So we'll talk about that later in the show. Once again, welcome to MyStockScanner Live, where we try to stay ahead of the markets when they're shifting fast. Today, all eyes and ears are on the Middle East. We have a deadline. What will happen next will definitely drive the market. Oil is sending mixed signals with usual price differences between the US and Europe. In US favor, it's the other way around, what's going on. And at the same time, Tesla is under pressure. That's news, not for Hans-Henrik. He will give you the full story on that. And why are investors still holding on to Tesla stocks when it keeps dropping? Good question. I know Hans-Henrik will take his swing at that as well. And in Denmark, Genmab gets a major upgrade, 43% upside is told by Bank of America. And as mentioned, AI race accelerates again with Anthropic and Samsung delivering strong signals. And in the US, even logistics giants like Amazon and United States Postal Service are reshaping their partnership. Who would have thought? Because Amazon said that you're done to the United States Postal Service, but not so fast. Number of today, 17 years. What it's about, you will hear at the end of the show. And let's get into it. The deadline in the Middle East, the Hormuz Strait is not open for business. There was a story about a LNG tanker from Qatar that kind of approached the strait but didn't go through. Hans-Henrik, that deadline, is it serious, or are we all gonna be eating tacos tonight?
I hope we're going to eat tacos. I don't think we are. I think Trump has to follow through. This is the fourth time he have proposed a deadline because they are negotiating. It doesn't seem like they're negotiating, so I think they will have to attack.
I was just reading about half an hour ago, Centrini Research, the ones that said AI is going to kill everyone's business. They sent a guy over to Oman and looked out, and they say there's actually somewhere around 15 to 20 tankers going through, just got AIS and all their navigation beacons turned off.
Yeah, but the thing is they're paying Iran probably, maybe paying in yuan, and these tankers are going probably to India and China. So they still need 110 per day.
Yeah. See, that's the difference. We're still very, very low, and you can see that in the oil prices. Liam, if we go to the oil prices, we have a little roller coaster going in the background. I don't think there's an oil field to have a roller coaster, actually. But here on the graphics, just like our planes flew backwards. So we have an artistic freedom here that we will take. But I'll ask you a question. Because when I normally look at oil prices, I see the most expensive prices is Brent oil in the UK, and then cheaper the crude oil in the US. today it's the other way around. Explain that.
Well, exactly. I mean, you can always look at it and say, well, British is always going to be best, and the US crude is just
Let the chance go by.
It's actually not the case. So you can see them here. You got the this is the light crude over in the US. It's WTI, West Texas Intermediate, and you got the UK oil down here, which is the decent sort of quality stuff the King makes. They're normally the other way around. So there's normally $4 or $5 difference between the two, which is a bit weird sometimes, simply because WTI is actually better quality. It's just sometimes there are infrastructure problems because most of it's sourced internally in the US, piped out, and also the UK side. That's where the rest of the world is really basing their numbers on a lot of the time, about 70%. So in this sort of time when actually you want the higher quality stuff to actually generate products and make products, that's, I would guess, why WTI is actually more expensive at the moment.
But as we've been talking about all along, it's so fluctuating at the moment. So at the end of the day, it could be the other way around again. Isn't that right?
It could easily. I mean, you can. Anyone can pretty much spot where the war actually started over down here, and it just went straight up. But we've had some really, really big spikes and what we call volatility. And there are certain people who've made an absolute fortune because people like option traders, futures traders tend to play vol or volatility, as we call it, and that's where they make the money. It's anybody's game. It's anybody's guess where this is going to go as well. We suspect upwards, because as the last container ship carrying LNG is hitting our shores, or aviation fuel, sorry, is hitting our shores in the UK this week, and then that's it. There's no more imports coming from the Gulf. After that, people are going to start bidding up oil, if they haven't done already, and we're quite surprised it's still quite as low as it is.
Yeah, and Hans-Henrik, when we talk about numbers, we have a tendency to look at the numbers and we trust them because they come out from sources that we know. But you had job numbers coming out from the US last week, and you were kind of going in your morning piece and on the weekend wrap, you said, I'm not sure about those numbers. It was very positive for the US. Why are you doubting?
No, some people think I'm doubting is the overall institution, the Bureau of Labor Statistics, that comes out with the numbers, and I think the numbers are true. It's not that I think someone is sitting and manipulating the numbers, but one of the reasons why it was so high, 178,000 new jobs, was that there were 50,000 jobs added because there was a strike that ended. And then the month before, that should have been subtracted or added, you could say, to the negative number. So it's just the 178,000 new jobs were not, it was not the fairy tale numbers that people were thinking it was. And also, this is just the first number, and we know they're being revised. So I will wait and see till next month and the month after to see what is the real number. I have a feeling it will go below 100,000.
We will get into investable numbers in just a minute, but before we do that, we have the Tuesday poll from last week that we got to take a look at. We asked you guys in regards to how we are hoping there will be a ceasefire and an end to the war. So we asked you, when do you think it's going to be? And there was sort of a majority, 38% said mid-April, and it goes both from members and Aktiesnak for alle. And then the second most popular one was June. Liam, in that sense, I know that this is everybody's game. This is guessing, and we're not using Polymarket here. But how close do you feel that our members are and our users are to picking the right numbers here?
I think mid-April, I think people are hoping rather than anything else. Mid-April is a week, and I know a lot can happen, but I just can't see. Even if something does happen and the straits open, we've got 6 weeks, 8 weeks before oil actually starts hitting various different places around the world. So we've already hit the point where we're going to have sort of quite massive disruption in global trade and global production of goods.
And as we see here, this is the Polymarket. Hans-Henrik, comment on that.
Yeah, I just pulled it up here. Actually, when we had our Danish show, there was a 3% probability for a ceasefire by today. That has dropped to 2% now, and that will keep dropping until 2 o'clock Danish time tonight if a ceasefire is not reached.
Unless Baron Trump is one of those 2%.
Yeah, I think he would have bet more than $17 million. And also, Trump announces end of military operations against Iran. It's not a war, by the way. It's a special operation. That is 2% as well. And then it's not really turning until we get to end of April, end of May here. So they tend to be they tend to agree with our members in the groups.
Let's see what happens. The poll will stay up, but we're going to ask a more general question this week because we're going to look at Tesla. And the reason why we're looking at Tesla is that JP Morgan came out and said that stock price is not going to hold water for very long. I know, Hans-Henrik, that you kind of raised your arms and ran around with your shirt over your head like Viborg has won in football, but that's not the truth. The thing is, take us through the numbers with Tesla, because it's not like it's a bad company, but something is not.
No, it's
Can I just suggest to people before we go on, strap in?
No. And as Jesper said, it's not true at all. Viborg lost this weekend. However, Tesla is actually an absolutely fine company quality-wise. For 84 earnings per share, they have been suffering some on earnings per share. That is going up again. Revenue is going up. The free cash flow even have gone up because they're investing a bit less, actually. Return on capital is quite poor. But the overall company is actually good quality. The only thing I really have is the pricing. And if we go down to into the value chart, it looks fairly good, a fantastic upside potential. If you're willing to pay price earnings in the 200 to 250, right now it's actually 330 when you trade it. So what we are looking at is more saying, what can we compare it with? And BYD in China actually have very competitive cars, prices. They have robots. They own their own lithium mines. It's actually a really good company. They have full self-driving on the level as Tesla and so on. Still a good quality company, free cash flow going negative because they're investing a lot. The interesting thing is that they are trading at multiples in the 20 to 30 area, which I think is realistic for someone like Tesla. And yes, I know I will be killed by Tesla fans out there, but if we just try the experiment and say with the earnings that people actually believe Tesla will get and price earnings like BYD, we'll see something between a 75 and 85% drop. So is that realistic? Well, no one knows. There might be people willing to bid it up to 400 or 500 in PE. We just think it's a silly pricing.
We want to ask, and that's going to be the Tuesday poll for this week, and then you can call it the discussion another poll if you want to do that. Stay within the sort of be nice to each other. But tell us, if you're having Tesla stocks, why are you hanging on to them? What are you building your belief in the company on when you hear the PE is 350 or 250 and it has to be 200 and more to you to make your money back? What are you building on? Because it can't.
Oh, did he disappear there?
He did. Oh,
there we go.
Yeah.
Everybody.
Internet is censoring Tesla speak.
Apparently it's, and we're not even on.
May I suggest out there that those of you that participate in the discussion act civil, because especially with Tesla and a couple of other stocks, the discussion they tend to get a bit heated.
And that is our, I won't say poll because it's not a poll, but we really want to know, what if you have Tesla stocks, what is it that you build your belief on? What is it that you see in the stock that we can't see? And let's get to something else where you can't invest yet, but there might be a back door, because Anthropic, Liam, now we're in Tuesday Tech here, they target a $30 billion revenue, and they have signed deals with TPUs in regards to Google and Broadcom. Isn't it time then, if you want to sort of have a little nibble of Anthropic, that you go into business like Google and Broadcom and buy their stock?
It could well be. It's not a bad way of going. Anthropic, I think, are aiming for an IPO, so listing on the stock market over in the US this year. And actually, for my money, they're a better company than OpenAI, definitely. And I think from an AI point of view, they're definitely ruling the roost at the moment. Partly they got some very good press on saying to Trump, no, we're not going to hand over the keys of AI to you to do anything you want. But also the coding model, everything. Yeah, the whole model just hangs together better than the others at the moment. I've been using all three to do various different things. But if we look at the companies we're talking about, so they announced a deal where they were going to buy 3.5 gigawatts of processing power from Google and use their TPUs for actually running inference and running training on their systems. The chips themselves are designed by Broadcom. So if we look at these guys very quickly, we can see, I mean, they're both very, very high quality companies. So if I do a very, very quick 3-point playbook analysis on them, first question is, are they a high quality company? A quality score of 97, earnings per share shooting through the roof, and also a really, really low PEG ratio, saying that there's more price increases to come. It's not all baked in, is great. Everything else is green. Hans was just looking at free cash flow there. It's going up and up and up. The returns are starting to sort of come back after last year sort of went a bit down, and they haven't got a debt issue. So that's great. Broadcom's point of view, yeah, I mean, it's difficult to, when you've got this sort of growth level where you put these numbers, but even if we put them quite low at a P of 50, an 80 on the top end, 38 on the bottom end, analysts think they'll be at 26. Even the analysts think next year they're going to be worth 50% more than they are now. So that's actually a really, really good company. They're going places. Broadcom don't actually make the chips themselves. They have patents and they design them. So I always call them the F1 race engineers. If you want a really fast chip, you go to Broadcom because they are the best at getting the massive performance out of these chips compared to some of the other competitors out there. From a question 3, so yes, the company's undervalued in our opinion. From a question 3 point of view, we're below the moving averages and the MTIs are red. So we look to be above the green line here and the black line. The red line is quite a fast moving average I use sometimes, but the green and the black are the ones that we really want to see. It's struggled, the stock, to actually go past it, so it's acting as resistance. We expect it to go up, come back down, and then bounce up again, and that's when we'll pounce on it. A bit like Hans's cat that was meowing just now. So, but actually, it's the most interesting input from that side of the room anyway.
Yeah,
it would have been Hans-Henrik saying it, or his stomach, really.
Google very quickly. We've got a quality score of 99. Earnings per share is not rocketing up quite as much, and we've got a PEG ratio that's quite expensive. It's over 2.5. So it's out of the zone we generally look at, but it is still a very high quality company. From a valuation perspective, actually there is room up. And it's probably the more solid all-round company because it's got huge free cash flows from its search and everything else that it does. So I put the bottom here, matching some of these bottoms over the last few years, but you could argue it could go up, you could argue it could go down. I've set my top really at the very peak that it's been, so that's a potential 41% return, and it's bounced just off of this blue line here, so that gives us a potential of 18% if it stays there over the next sort of year and a half or so. Again, it's not in our buy zone right now. We've got the MTIs that show whether the stock is in a strong momentum channel. Both the daily and the weekly channels are red, and it's below the 50-day moving average, but it did bounce around here, so it's looking like it's going in the right direction. But we wouldn't buy either of these at the moment. But fantastic stocks, and it is a way of getting in on that Anthropic discussion.
And I'm gonna put the Formula One engine to work now, Liam. Let's see if you can do that, because I'm gonna bring up Samsung before we pack in the Tuesday tech. It came out with Q1 earnings and a profit that was 8 times what was expected. Or what they had
last time,
over the last quarter. Yeah, is there gas in the tank? Should it be a buy?
Let's have a look, shall we? It's not up to me to say; it's up to the numbers to say. That's a nice thing about the playbook. You look at these, quality score 89, stock is shooting through the roof. You've got a PEG ratio of 0.1. Return on capital shows that they're not too bad. They're just throwing an awful lot of money at expanding, and free cash flow is expanding there as well. This is all in Korean won. So yes, very, very high quality company. The answer is yes, it's very undervalued at the moment. I mean, I'd imagine it's shot up today. I haven't actually looked at the numbers today, but it's probably up 5 or 6% today. But there is significant increases. And again, the analysts with a PE of 8 I always, I have no idea. Were they drunk? Were they tired? Or I don't know. So a PE of 8 sounds ridiculous. A PE of 10 at the lowest side of things sounds ridiculous. But if they hit that PE of 10, they will get 56% up in the next year and a half. So it's a significant increase. And if you look at the averages for the last 10 years has been 40. The averages for the last 3 years has been 22. So I don't see why Samsung wouldn't significantly go up. The danger with Samsung on this is that, if I just switch over to TradingView very quickly, is we can't necessarily buy them and access the Korean stock exchanges. They are opening at the moment, but it's difficult to get in there. I don't think I can do it from my Interactive Brokers account, which tends to be the easiest one to get into. So there are some smaller stocks listed, they are listed as well in the UK. I think there's a German option as well, but they're quite small volume. They're currently looking at listing in the US. And
right now, to answer your question in regards to whether they're shooting up today, I can tell you from the London exchange, the small one, as you mentioned, 6.9% up on the day. So, we're waiting. Let's just say
we wouldn't put any serious money into the UK stock exchange at the moment because it's just not got enough volume. But it has bounced very nicely just below the 50. It's bouncing back up again. It's in our buy zone as well. So what's not to like if you did want to go for that and have access to it?
What's not to like if you're told that there's an upside in your stock of 43% and that measurement come from Bank of America and it's in regards to Genmab? Hans-Henrik, take us through that story. That sounds like we should rush out and buy that stock, shouldn't we?
We've actually looked at it for a while now, and it's really good quality, or it has become really good quality actually. And 72 earnings per share going upwards, revenue. They were in a hole here in 25 for some technical reasons, but it's actually a decent company. Free cash flow as well, a bit bad here in 25, but they have no debt problems. And when we look at the value chart just here. I had put the PE from 22 to 32, which in a company like this, with some really good cancer drugs and other special that they're focused on some of the more severe problems outside cancer as well. They have from 38 to 102 in potential. Analysts, I think 27, so that is absolutely fine. And I think we do not like to buy these that have had these dips in earnings, but they are in the next earnings season here, and that looks really good. So I would not rule it out. Looking at TradingView just quickly, it is bouncing off a level here. We are just below 250-day moving average. So if it goes up above here, and of course have double green in our own MTI indicator, I think it will be interesting.
We'll definitely follow suit on it and keep an eye out, and you will hear more about it here on MyStockScanner Live that we broadcast 5 days a week in Danish at 12 o'clock and 2 days in English. That's Tuesday and Thursday. And talking about Thursday, we should have bumped this to Thursday, but now we're going to do it, Liam. We're going to do it really quickly. Per definition, Amazon is also a tech stock, but we're going to look at the package side of things because they have said that they were going to skip working with United States Postal Service, but this morning came out and said it's back on again. Is it a sign that they're selling a lot of things and they need extra people to get out their packages?
I think it's partly that. I would imagine it's also partly the US Postal Service just turning around and saying, all right, we'll do it for a lot cheaper then. That's probably going to be the way it goes out there. Amazon itself, great company. The PEG ratio is a little bit high, but from a pure quality point of view, we're looking at potentially earnings sort of still increasing. The chart doesn't really show that difference too much in there, but yeah, great company, and it's really been beaten up recently. But we did spot about a month ago, it's bounced off of this line. I mean, I drew this red line quite a while ago. So it's bounced off of that band and has really gone up and is now tested the red band again and then it's going back up again. So actually, all the time it starts crawling and following one of these lines, either the analyst or even the bear case. I mean, even in the bear case, we're looking at a 23% rise this year, or the 8.5% sorry, it's break even this year in the worst case. But I was reading an analysis of these companies yesterday, and there's quite a few analysts saying Amazon are one of the best placed to actually start realizing their spend on AI going forward in their data centers. And would we buy it? Not right now. Just it's a little bit low, but the parcel service, it's a smaller part of what Amazon offer. Most of it's AWS, but it's actually a sizable part of their business. I'm not sure they quite make the margins on it to make a huge difference for us.
We shall see. And United States Postal Service, of course, isn't a public traded company. It's run by the government in the US. So there's a little bit of a handout there from the private sector to the public sector by them using them. We're going to end the show on number of the day. And the reason why it's such a surprising number, 17 years since Microsoft had a worse quarter than they had this one. I'm going to ask both of you guys, 17 years, is that a sign for Microsoft, or is it just a little glimpse and then we move on and upwards again? What do you say?
Well, I think it's cheap. No, the thing is that it's actually it's an absolutely decent company. The question is, and that is one of the reasons why it has dropped, always be careful about stocks that drop, because there might be a reason for it. And one of the reasons here is that Microsoft is pouring hundreds of billions of dollars into data center AI infrastructure, and they have not for real proven that they can get a yield on that money. If they can, and if the analysts are right in where they are pricing the income, it's really cheap now. 22 in PE will bring you up just 13%. So there's a good bear case and base case and bull case.
That was a quick one. Well, it can be done. Now we saw that. How about we end the show here, because we're coming up on time. We got to remember that Liam is going to post his articles in regards to our Tech Tuesday, and he will be back on the show on Thursday at 1:00 in the afternoon. That's where we have our Thursday Tech, amongst other things. And then follow us on our webpage, MyStockScanner.com. You're privy to read the entire article if you have a membership. If you haven't tried us, then do. It's free for the first month, and you will get lots of information from those tech writings that Liam has. Also, the market scan from Hans-Henrik, that's sort of the helicopter view of the markets before the markets open, comes out just before 9:00. And then we have our show 5 days a week at 12:00 in Danish and English, as said, Tuesdays and Thursdays. All that's left for us to say here is happy investing. We will keep you posted if anything happens in the market. Be sure Liam and Hans-Henrik is on their post, and they will keep you orientated about what's going on. Happy investing out there. See you in English on Thursday. Have a good one.